Good morning. Are we on? There we go. There we go. Good morning. I want to welcome everyone to the first meeting of the House Insurance Committee. I know we'll have a few other people coming in. As always, it seems like we have committees overlapping each other, so we'll have some other members coming in here shortly. And I think one of our presenters is still waiting to arrive. So before we get started, if you would, please join me in a moment of prayer. Our dearly Father, we thank you for this day. We thank you for your love and your goodness to us, for watching over us and caring for us, and we thank you for all the many blessings that you've seen fit to send our way. We ask that you would be with this body, our entire legislative body today, as we seek to go about trying to do the work that we've been sent here to do. We ask that you would guide and direct everything that goes on in this place, that it might be to honor you and might be for the good of the whole state of Georgia. So we thank you for these things. In Jesus' name we pray. Amen. Okay. We have 24 members on this committee, but as you can see, we're not quite at full strength yet. So before we conduct any business this morning, I'm going to hold off on that until some of our members do get here. We do have some new members here with us this morning, and also some that are coming back. So if you just let's just take a moment, and if you would please, buddy, introduce yourself, tell us where you're from, and a little bit about your background, if you have an insurance background or your business background.
I represent Georgia House District 167, which is all along in McIntosh County, part of Glenn, part of Liberty, and part of Wayne. I live in McIntosh County in the northern end, right on the Sapelo River. I've been in the property and casualty insurance business for a little over 50 years, worked at the company level with large companies and went through training programs. I've worked for brokerage houses and traveled the Southeast, and I've owned an independent insurance agency for the last 43 years.
Thank you. Let's see, what's your number? 25. All right.
Thank you, Mr. Chairman. I'm Karen Mathiak. I'm a chiropractor by trade. I have served on the Georgia Examining Board for many, many years, and once I became a legislator, I had to resign from that, so that was a little painful. I represent District 74, which is Fayette County, Peachtree City, a piece of Peachtree City, Brooks and Woolsey, Hampton and Henry, and I live in Spalding County.
And how long have you been here?
This is my fourth term.
Fourth term.
Yes, sir.
All right, very good. And John Carson, Representative Carson, that's 23. Okay.
Thank you, Mr. Chairman. John Carson, represent part of Cobb and Cherokee counties. Very quickly, just two things. One is about 12 years ago, after my election, I got a call from then Majority Leader Larry O'Neill, and he found out that I had more of a financial background. He asked me if I understood risk allocation tables, and yes, and did I understand premium risk, and yes. And he said, Johnny, have you thought about insurance? And this is the last committee I was thinking of. And I said, well, no, sir. And he interrupted me and he said, son, you ought to think about insurance committee. And so I was here quite a while and glad to be back. I look forward, just for the indulgence of the committee, I do look forward very much to this presentation. And I would just say, just from a historical standpoint, it was this presentation 6 years ago in this committee that gave myself and my dear friend and former rep, Chad Nemmer, the idea for the hands-free law.
All right. Bruce Williamson, what's your mic number?
27.
All right, sir. Introduce yourself.
Thank you, Mr. Chairman. I'm Bruce Williamson. I represent Walton County. I had the pleasure of serving on this insurance committee almost in my entire legislative career. I spent 30-plus years in the property and casualty insurance business, and I have no interest in it any longer, but other than I did learn a little bit while I was there. Happy to serve on this committee, Mr. Chairman.
All right. Thank you. And Representative Williams.
Thank you, Mr. Chairman. I'm Noel Williams, House District 148. I represent Crisp, Pulaski, Wilcox, portion of South and Central Houston, and a portion of Ben Hill. I've been in the insurance business since I graduated from University of Georgia in 1994. Proud and happy to be on this committee and serve at your pleasure.
Thank you. And I'm Eddie Lumsden. I am representative from the 12th District. I represent Floyd and Chattooga counties. By background, I'm a retired state trooper by profession, but also my wife and I own an insurance business, and we've been operating that since 1988, and hold license in property casualty, life, and health. So as you can see, we've got a mix of people on the on this committee so far who do have some knowledge. We've got a couple of other folks down front there. Let's see.
Sir.
Number 12, go ahead and introduce yourself and give us a little bit about your background.
Thank you, Mr. Speaker. My name is David Sampson, and I've been in the insurance business since 2013. I typically work in the Medicare space and Medicare Advantage, Medicare Supplement space. I have an insurance agency in Albany, Georgia. So a lot of folks think that's Albany, but it is Albany. And I'm just excited to be here. So a lot of people have been here numerous terms. This is my 4th week.
Well, welcome. Good to have you
Thank you,
here.
sir.
And Representative Davis.
Good morning. I'm Representative Viola Davis, serving Georgia House District 87, located in DeKalb County, primarily in Stone Mountain, Tucker, and Pine Lake. By profession, I've had over 25 years critical care experience, trained in combat nursing, and also as far as insurance experience, this is the first committee, one of the first I was assigned to once I was elected, and the insurance experience I have acquired is from my fellow legislators who have graciously taken their time to explain many items to me. And for that, I say thank you. Thank you, Chairman.
Thank you. Glad you're part of the committee here. And as we have some others coming in later, we'll revisit that. We do have a few things to deal with business-wise, but we will do that later. I would also direct the attention of my members. Included in your folder, besides the rules, which we will deal with later, you have a list of the subcommittee assignments, and we do have some bills that have just been dropped, and we will be dealing with those in subcommittees early next week. So just if you have any questions, feel free to reach out to me and ask about it. But this morning, as part of the program, I believe that we will be receiving some very good information that will help us as we get into the further part of this session as bills come before us. We're privileged today to have someone who's been with us before, but is every few years it's very good to return to revisit that. So we're going to have Dr. Hartwig, who has been with us before, but he has some information that he wants to present to us, and I think will be very helpful. You feel free, the microphone is yours, either from where you are or wherever you prefer to sit.
Well, thank you very much, Mr. Chairman, and let me get right into it, and thank you for the opportunity to appear again before this committee. No exception, so I'm going to try to give you kind of a quick whirlwind tour through what is driving auto insurance costs in this state, and a little bit about how they compare to the rest of the country. So without any further ado, let me begin by talking a little bit about the Georgia auto insurance market in particular. I'm very pleased to report that it's a very, very competitive state. And we'll be talking a bit about what is driving the higher losses here in the state of Georgia. Quite frankly, you got an epidemic of deaths on the highway in this state. You've got a lot of very severe claims, a lot of very poor driving behaviors, which are increasing in frequency, that are leading to a rapid deterioration in the results that auto insurers, in fact, see. This is compounded by inflation, which we've all been dealing with, and that's true for every industry, including the insurance industry. And then we'll have have some time for some Q&A at the end. But again, talking about the competitive profile of the state of Georgia's auto insurance market, it's highly competitive. That's not my assessment. That's the assessment of the U.S. Department of Justice. You've got over 200 private passenger auto insurers competing for about $11 billion in premium in this state and 4 million vehicles. So a very healthy, large, vigorous, competitive auto insurance market in this state. And again, I mentioned the U.S. according to U.S. Justice standards, what's called the Herfindahl Index, that number would be rated at 647 if you actually calculate it. It won't go through that, but that's considered not concentrated. In fact, it's considered a very competitive marketplace. So what conclusion do I draw from this? By federal standards, Georgia's auto insurance market is very competitive, and there's no evidence whatsoever that a lack of competition is what is pressuring auto rates in the state of Georgia. Now, let's go on from there. Let's drill down right onto the Georgia's highways and byways itself. Fatal auto accidents are increasing rapidly in this state, despite the pandemic and fewer people driving, at least for a period of time. And they continue to climb, even as deaths are actually falling a bit around the United States as a whole. Most of the deaths in this state are due to an increase in unsafe driving behaviors. Here's the very sad news. The most recent data from the federal government and from GDOT, we could see that the estimated number of fatalities on Georgia's highways was nearly 1,900 last year. That is the largest number that I have in the data that I could see over the past 15 or so years. That's up about 3.8% in 2022, even as the United States overall saw a decline of about 0.2 percentage points. So Georgia is moving in the wrong direction compared to the rest of the United States, and the number of deaths has been accelerating rapidly. Traffic fatalities overall in the U.S., as I mentioned, seem to have peaked in 2021, and we're just down a hair, it looks like, in 2022. So again, there's a net difference of about 4 percentage points in terms of where traffic fatalities are going in Georgia versus the rest of the U.S. According to GDOT, about 56% of fatal accidents in the state of Georgia were due to victims who were not wearing their seatbelts. You've got about 76% involve situations in which people are intoxicated or similar other forms of impairment. And unfortunately, not only are people dying in cars, they're taking out a good number of pedestrians in the process. About 17% of highway fatalities are actually due to people who are walking along the side of the road, which is very tragic, of course. Now, kind of laying the land there, let's drill down a little bit more into Georgia. I think there's a misconception somehow that the private passenger auto insurance industry is wildly profitable. In fact, nothing could be further from the truth. Let me give you the actual numbers here. This is the return on net worth for private passenger auto, Georgia in red versus the U.S. overall in blue. And so you can see the numbers here that Georgia, over the period, you could see here about 15 years, this is the latest data available, about 3.4% return on net worth versus about 6% for the U.S. overall. And by the way, the Fortune 500 for all industries over the same period was 13.8%. So again, there is no evidence whatsoever that there is any sense of excessive profitability in the Georgia private passenger auto insurance market. And in fact, when we look around the southeast region, you see the gray dotted line here, and I've circled it with a red dot at the end in the most recent data point, this compares profitability in Georgia versus all of your neighbors and the U.S. overall. And what you actually see is that in terms of ROEs, or I should say returns on net worth, I'm going to get the final number up here, but what you can see is Georgia's actually the profit laggard of the southeastern neighborhood in terms of private passenger auto insurance. So again, nothing is remiss here, other than actually the profitability is quite depressed in the state of Georgia. And when I show you some of the results, you'll understand why. A lot of it has to do, particularly in recent years, with rapidly rising claim severity. In other words, the average cost per claim. And this is being driven not only by the poor driving behaviors I already discussed, but also, again, inflation, which is pushing up just about everything in terms of the cost of treating people, the cost of repairing vehicles, replacing vehicles, you name it. To give you a sense of where that all comes to, where the rubber meets the road on this, with the inflationary pressures and the increase in poor driving behaviors, what we could see here is a fairly substantial increase in the industry's loss ratio, the auto insurance loss ratio. This is overall for the U.S. I'll show you Georgia in a couple of minutes. And what we are seeing is some mirroring of what's going on in Georgia across the U.S. We've seen about a 24% increase, for instance, in auto physical damage loss ratios. That's the cost of the other cars you might, the cost of damaged vehicles in accidents. Now, as we all know, inflation was at its highest level last year as it's been in 40 years. It reached 8% was the final number for 2022. And clearly that's an issue for every industry, including insurers. This drove up the cost of everything. If I drill down, we even see that right here in the Atlanta metro area, you see the orange line. Inflation, this is kind of looking on inflation on a cumulative basis since 2017. The Atlanta metro area versus the U.S. overall. You could see since 2021, in other words, in the post-pandemic world, what we see is inflation running at a materially higher rate in this area than it is in the U.S. overall. Just to get right to the bottom line here, in some sense, if we look at the average cost per claim for various types of coverages in auto insurance here in Georgia, collision, property damage liability, bodily injury liability, and comprehensive, we could see that the first couple are up near about 40% or so. Collision, property damage liability, that's where a lot of the losses are. Bodily injury, again, a lot of medical-related issues in there, up about 23%. Comprehensive, which is driven to a significant extent by weather in some cases, is up about 8%. And looking at it a little bit differently, I wanted you to see what's happening to the severity, the cumulative change in severity in Georgia for, this is bodily injury liability in red. You could see beginning at the beginning of 2019, before the pandemic, you could see how it was increasing steadily. In blue, frequency was increasing as well a bit, but frequency dropped during the pandemic, is now coming back, but is still somewhat depressed. But it is absolutely swamped by the average cost per claim. And of course, that's being driven in large part by inflation and in large part because of these behaviors which give rise to more severe accidents, including fatal accidents. So here you can actually put some real numbers to it. So what is the average cost of a bodily injury claim in the state of Georgia? Well, I'm sad to report that it reached an all-time record high of $26,578 in the middle of last year. And it's the most recent data show that's roughly where it is, down a hair in the third quarter. So it's been rising rapidly. To get there, what we've seen is increases of 15%, 9% over the last quarter and the most recent full year, respectively. And if we move to another type of coverage, property damage liability, so the damage you do to other people's cars or crashing into their houses or whatever it is, we could see that those claims are now at an all-time record high, $6,217. All-time record high for these numbers, up almost 36% since 2020. Very sharp pace of increase. And you could see over the last several quarters, they're up about 20% or close to it each of the last 3 quarters, year over year, for which we have data. Very, very sharp increases. And collision claim severity, so when you smash up your own car here, you've got claims of about $6,000 on average. We're just a few dollars off the record high that was hit last year. So for all intents and purposes, we are floating around at record highs for essentially almost every type of coverage that exists in the state of Georgia. So that puts a lot of pressure, obviously, on insurers. It's what's driving up the loss ratios. And again, you could see the pace at which these collision claims have been increasing. Very, very sharp pace of increase in the last couple of years. So right here in the state of Georgia, when we look at the collision loss ratios, in other words, what insurers are paying out relative to what they are taking in, not including the general overhead of the expenses of the insurers, what we are talking about is here in Georgia about a loss ratio of 88.8, and that is up 20 points over the 5-year pre-COVID average. So what that means is that the average cost of claims in particular is rising much faster than whatever rate increases are being passed through in the state of Georgia. It's not even remotely close. On comprehensive claims, which again are driven oftentimes by weather, but things also by like theft, vandalism, those are also at a record high as well, at least as far as the data that I was able to analyze. And again, partly driven by inflation, but we have to understand that apart from all of this, guess what? Many, many thousands of cars are destroyed every year or damaged every year in the severe weather that we've been having, and Georgia is not immune to that as well. So whether we're talking about hail events or tornadoes or tropical events or flooding, which is actually covered by automobile insurance, we're talking about significant auto losses caused by these record or near record catastrophe losses we've been suffering around the country. So a last couple of comments here, and then we'll have some time for some questions. I wanted to drill down a little bit so you could see kind of at the micro level what kind of inflation we're experiencing in the personal auto insurance industry, and quite frankly, what a lot of people might be experiencing when they have to repair, they have some repair costs out of their own pocket. So for instance, when we look at the price change for new vehicles, this is a year-over-year changes on a monthly basis. So we could see that the sharpest increase was in April of last year, where new car prices had increased at a 13% annual clip. They're still increasing at about a 6% annual pace. That may sound like an improvement. Remember, the price of the vehicles is not going down. They're just going up at a slightly slower pace than they were before. So the price of new automobiles in general, it's not going to be going down. For used cars and trucks, we could see that those increased very sharply as well. The prices for used cars and trucks remains nearly 40% above what it was prior to COVID. And when we look at such things as the cost of replacement vehicles, we think about the cars themselves, but getting your car repaired and getting a replacement vehicle for that is an increasingly expensive ordeal. The cost of replacement vehicles was up as high as 20% in late 2021 and is still rising at an average annual pace of about 5%. Not only that, if you take a look at this, the average collision replacement rental, in other words, how long it takes your car to get repaired in the state of Georgia. Some people in this room may have a personal experience with that. 21 days is the average collision replacement rental, and Georgia is tied for the second highest in the entire United States, tied with Oklahoma, and just a bit behind Louisiana, which is the leader. So in other words, take the rising cost of a replacement vehicle times the increase in the number of days. What we could see is that in Georgia, we could see that there has been a change of about 3.9 days, an increase of 3.9 days over the past 4 quarters, and 8.5 days since the third quarter of 2020. So it takes a week longer, more than a week longer on average to get your car repaired nowadays, and so that's driving up the rental costs. And we mentioned there's still kind of a shortage of new vehicles out there, with fewer vehicles being produced, not because of lack of demand, but of course, we've all heard about the supply chain issues. And last but not least is the medical pressures that are out there. We can see a substantial acceleration in medical cost inflation. So when we think about bodily injury, those sorts of costs, potentially also driving litigation costs, while those are off their peak from August of last year, they're still rising at about a 4% annual pace. So to summarize, Georgia, the good news is, has a very competitive auto insurance market, but there are a lot of buts here. The highways are becoming increasingly deadly in this state. The insurance industry's claim experience mirrors the sharp increase in highway fatalities and serious accidents. The state today has extremely adverse auto claim severity trends, worst of the country overall, pushing severities, pushing loss ratios higher, well above pre-pandemic levels. by about 20 points or so. And so these inflationary pressures remain affecting the cost of new and used vehicles, parts, labor, replacement vehicles, medical care, and much more. So I'd be very happy to take your questions, but the bottom line, of course, for insurers, given what's happened to the loss ratio, is that rate adequacy is an immediate concern as these loss ratios continue to soar. Thank you very much.
Thank you, Dr. Hartwig. Members, do we have some questions for Dr. Hartwig? I would just, if you have any thoughts regarding, why are we seeing such an increase in our number of accidents?
Well, I was almost late here this morning. That was I got to experience at least drive past 2 accidents on I-20 on the way here. Here's the good news for Georgia. Your economy is booming relative to the rest of the United States. People view Georgia as an attractive place to come to work, to go to school, even to retire. It's a very military-friendly state, so the state has a lot going for it. But at the same time, the infrastructure of this state, and this is true in other states in the Southeast, really hasn't kept up with the increasing number of people on the roads here in the state of Georgia. And what you typically see with greater congestion on highways and byways is you're going to see more frequent accidents, unfortunately. That's one part of it. So you've got to balance what's happening, the good parts of what's happening in the economy that's good, with various infrastructure investments that are going to have to be made to make Georgia's roads safer for all. But on the other hand, Georgia is suffering disproportionately from an increase in driving behaviors, as I mentioned. Most people apparently aren't buckling up, at least those who were involved in severe accidents, and that's contributing to deaths and very serious injuries here in the state. There is an issue in Georgia, and again, it's not isolated to Georgia, where we have people driving under the influence, and I'm not talking just about the influence of alcohol. We have opioid problems and things like that are affecting Georgia and many other states as well. So the degree to which enforcement is in place on these sorts of things in Georgia's highways, I can only speculate. So that's a little bit beyond me to be able to address that issue. Issues such as distracted driving are kind of universal, and they are affecting Georgia drivers just as they are everywhere else. But I think I actually was asked a similar question last year and made a suggestion that I'll make right now, that I think Georgia likely probably needs to undertake a pretty serious study, perhaps by GDOT or perhaps by law enforcement, to understand exactly what is happening on Georgia's highways. What we know is happening on Georgia's highways is that more people are dying every year. More people are being injured every year, and more people are destroying their vehicles every year. To get to the root causes of all of that, I think is going to take a study, again, on the part of the state of Georgia. And then once you understand that, you'll get to understand how much of that is infrastructure, how much of that is congestion, how much of that is associated with poor driving behaviors, and how much of it is associated with distraction or intoxication and those kinds of things. I think that can help you give you more direction. In the insurance industry, we're kind of on the receiving end of all of this. The receiving end meaning the bill. And whether the accident is a fatality, or it's a serious accident, a vehicle is totaled, or it's a fender bender, we see all of it. What we know is we're seeing more of it. And what we're seeing is that they are, each and every claim is costing more. We know that inflation is driving part of that. Okay, and we know that those inflationary pressures remain. And we also know that it takes quite a while for insurers to reflect these inflationary pressures in their rates. There's a substantial lag. So unlike your local gas station where they can change the price overnight, and they do, auto insurers have to wait till they have experience. They have to form a new rating program for the year ahead, and it takes a whole year to roll that out to all of their customers. So there's an inherent lag in there, and we're still making our way through that.
All right. Representative Carson, I believe, has a question.
Thank you. I think Dr. Hartwig answered it. It's in regard to what can we do as policymakers in Georgia to combat this, and I think you just mentioned it. So I guess I'll just summarize, and correct me if I'm wrong, Doctor. It's partly infrastructure. A lot of it has to do with intoxicated driving, driving without seatbelts, and the overall issue globally of distracted driving. I mean, it's not any one particular thing. We can't just hone in on one thing, correct?
That's right. The answer is more complex than just focusing on one issue. We'd like to be able to say it was just intoxicated driving, we could crack down there, or it was just distracted driving, we could try to crack down there, and there has been some legislation along those lines. But addressing issues of infrastructure, for instance, or people not buckling up. I mean, we're talking about major investments on one hand, we're talking about education on the other. And again, the numbers I cited in terms of what was behind the fatalities on Georgia's roads, they aren't the insurance industry's numbers. They're the Georgia Department of Transportation. Okay, so we have at least some understanding in the state of what is driving us. The question is what is the state willing to do about it?
All right. Representative Williamson.
Thank you, Mr. Chairman. Very interesting presentation. Just out of curiosity, the severity on the bodily injury, when we benchmark Georgia against other states across the U.S., is any of it, in your professional opinion, of this spike in Georgia being driven by our tort laws? Is it?
Well, the answer to that, both in Georgia and in the United States, would be yes, in the sense that people are certainly encouraged. They are, I would say, inundated with advertisements, whether it's online or on billboards, television, and radio. I heard dozens of them just on the drive up here from South Carolina, essentially encouraging litigation. And so obviously, to the extent that you have more litigation than perhaps there otherwise might be, that's certainly going to drive up severity and to some extent, likely frequency as well.
But just follow up on that, you know, as I understand, and I'm not a lawyer, that, you know, that's just competition now with that Supreme Court ruling decades ago. That's free market capitalism, and I'm fine with that. But what is a business guy and ex-insurance guy, what I've got a problem with is where our tort laws are not as probably balanced as some of the other states. And the consequence of that appears to be that we're going to be paying a lot more in insurance premiums. Everybody needs equal access to justice, but at what cost to the entire populace of Georgia? I've got one follow-up question on your presentation. The high loss ratios that you did show in the private passenger automobile, did that include the incurred but not reported? Was IBNR in that, or is that IBNR in fact
I
on
would
top of that?
now. I'm going to, unless someone has a clarification here. The loss ratios that you saw would have included incurred but not reported. What it doesn't include is kind of the overhead expense
Absolutely,
component.
yeah, that's just pure dollars coming in, pure dollars going in.
Yeah, so if the insurer is aware of the claim or has some reasonable expectation, yeah, that the incurred but not reported would be something that would be included in there. Yeah.
Thank you.
All right, is Dr. Hartwood's presentation, some of the members have asked if this might be available where you could provide this.
Yes, so maybe, could you
Right.
email that to them? Yeah. Yeah.
We'll
Yeah,
get that
it to you.
emailed
Yeah.
To everyone.
Yeah.
Dr. Hartwood, thank you so much for being here
Thank
today.
you much.
We appreciate your time and coming to do this for us and giving us this great information for us to understand. As part of that process, we also have with us Steve Manders, I believe, from the Insurance Commissioner's Office, and some other folks from his office. As they're going to talk about some of the same issues, but from their perspective. And I just asked Steve, if you would please make your way to the microphone. You can sit down at the table or you can stand at the mic, whichever you're most comfortable doing.
Thank you, Chairman.
Tell us who you are and what your function is over at the Department of Insurance.
Name's Steve Manders. Been in the department 36 years. Deputy Insurance Commissioner for Insurance. So I'm over several divisions. One of the divisions I'm over is the, get a little hoarse this morning, but the rate, rules, and forms section, our product area. And that's the area that is more impacted. So after hearing Doctor's presentation this morning, retirement doesn't sound too bad right now. But we do have some issues in Georgia, as some other states. But I just wanted to spend a little time with you this morning. As the commissioner would say, that this is sort of where the sausage is made. This is where the filings come in. This is where we correspond with the companies, discuss overall rate levels, look at trend, look at loss experience, look at IBNR, look at the company overhead, and they present their rate indications to us. And so I just wanted to go over a little bit. We receive over 10,000 filings a year between our property and casualty and life and health units. These filings can be from 2 pages, could be an endorsement on a health insurance policy, or it could be 3,000 pages when a company's filing a scoring model or something on a private passenger or a homeowner's policy. Now we're starting to see the models in some of the commercial coverages. So we receive over 10,000 filings. We have a staff of 12 people that are reviewing those filings. So it's a lot of volume. Takes time to get through these filings. We currently have, the NAIC has produced an electronic filing system for us. When I first came to the department, we didn't even have computers. Everything was paper. You know, we just have cabinets and cabinets and cabinets of paper. So, but NAIC has developed this electronic filing system. It's all online. You can go in as the public and go in and look at those filings. Some of the filings, some of the components of the filings are not public. The credit scoring models and the models are not public, but all the base rates and all that is can be viewed by the public. That has really sped up our process. We can correspond in SURF to the companies. So we can use email, or we can actually email within SURF itself, and we can keep a record of what's going on with each of those filings. Briefly, I just want to touch on sort of our filing laws, sort of the Bible of what we have to go by when we're dealing with the companies. All our forms are prior approval. So a form cannot be used unless the commissioner has stamped his approval on the form. We have 90 days to review those forms, and we can extend that review period up to 60 more days if additional time is needed. So, and then at that point, if we have not acted on the form, it can be deemed approved if we have not acted or extended that time. So there is a deemer provision in the statute. Our rates and rules are a little different. Every rate in the state of Georgia is file and use except for private passenger auto, all right? So med mal, homeowners, commercial property, any line of insurance other than private passenger auto, the companies have to, it's file and use, but the companies have to give us 45 days prior to their effective date when they make their filing. So if they're wanting to put a filing into effect February 15th, they'll have to have it on our door by 1/1. So we've got 45 days to take a look, to look at the support, look at what they're changing, look at the amount of impact. So the only other line that is different is private passenger automobile. There's a dual system of approval in private passenger auto. So currently, there is a prior approval component and there is a file and use component. The prior approval component applies to any of your minimum premium policies, automobile insurance is statutory coverage. You have to have it to be on the road. So the the prior approval is for companies' minimum limit policyholders. All other coverages, so that's your liability coverage, your bodily injury, property damage, base limits, okay? All other coverages fall under file and use with no waiting period. Where the other lines of insurance had a 45-day waiting period, private passenger auto, so your comp, collision, med pay, all those optional coverages can go into effect immediately. As you've probably seen in the press, we've had some companies that do not have minimum premium policies. They will not write the minimums. They write 25, 50, 30, or they write 25, 50, 27.5. So it kicks them out of the prior approval component of the statute, and they can put whatever filing they want to go into effect immediately. Of course, they have to support the filing. They have to provide overall support. And looking at the experience from an earlier presentation, you can see that a lot of these filings can be supported. But the concern is that being able to put that filing into effect immediately. All other lines, we get a chance to look at it. And automobile insurance affects more of your constituents than any other line of insurance out there. There's more than homeowners, more than commercial. There's more automobile policies sold in this state than any other line of coverage. So not only we can talk about rate and the overall effect. I mean, it's public. Allstate filed 14.9 earlier this year and turned right around and did a 25%, all in 1 year. Cumulatively, that's about a 43% increase in 1 year. We couldn't stop it. We didn't have the authority to stop it. Once we review the filing and see that it's not supported, then we've got remedies at that point. We can do a show cause hearing and bring them in for a hearing, but that takes time. Those filings are currently under exam, and so we've got an outside actuary taking a look at that. But those filings are in effect, the 43% increase. So, but not only is it the rate that we're dealing with and not being able to negotiate or have a discussion with the company, it's a lot of these scoring models that they're utilizing also. So not only are they increasing rates, but they'll have a proprietary credit scoring, insurance scoring model that they are looking at all type of data. They're data mining out there. I mean, we currently have a filing sitting over there. You're rated depending on how many family dollars you live around. So that's a rating component in the filing. Is if you've got 5 family dollars within a 5-mile radius, you're going to pay a higher rate than if you've got $1 store within a 5-mile radius. So I mean, we're getting down to those type items that the companies are filing, and we're going to reject that. We have companies that are wanting to utilize education and occupation in the rating of their auto policies. No state allows income to be used as a rating variable. That's a prohibited rating variable in every state, how much you make. So, but we feel like education and occupation is a surrogate for income. More than likely the attorney is going to be making a little more money than the mechanic, or maybe not in today's market, but those are items that we go through those models and make sure we feel like we have the duty to the insuring public out there that the companies are using variables that make insurance sense and good public policy. And we just feel like some of the items they're utilizing in today's models are sort of borderlining redlining when you start talking about how many family dollars are within a 5-mile radius of your residence. So those are the challenges we have. And all the other lines, we get that 45 days to take a look at the filing before it goes into effect. Private passenger auto, if they are not filing minimum limit, if they don't have any minimum limit policyholders, they're putting those filings into effect immediately. We currently have about 35 companies that are sort of bypassing the prior approval statute and are putting filings into effect immediately. So that's just sort of the filing rules that, like I said, we get about 10,000 filings a year. That's actually down a little bit, especially on the life and health side with the ACA going into effect several years ago, where we used to get all those health filings. Now we get one round of filings a year from the health carrier, so that has reduced our volume down a little bit. But we're still getting hammered on the property and casualty side. So I feel free to ask any questions or.
We have a few here.
All right.
Representative Williams.
Thank you, Mr. Chairman. Thank you, Mr. Manners. I know that you've been a fixture, if you will, at the department for a long time, and you're quite the professional. Nobody knows the department's history better than you, especially since you started without computers. But yeah, you know, and I think you and I have had some online conversations, so you probably know where I'm going with this. The currently under the system of file and use, you have the ability, those rates have to be justified in that filing. But sure, the insurance company XYZ can effectively put in a rate increase, if you will, but they've got the documentation to back it up, presented at the same time.
Yes, sir.
Okay, so I guess my question is, if the data is there, and at some point the department says this data doesn't justify it, and I really didn't realize that it's called a show cause hearing, how often are these show cause hearings happening?
Very few.
In
We've only had a few since I've been at the department. But I attribute that to our other filing law that gives us the 45 days to have a discussion with the company on the front end. You know, these numbers that you just looked at, you know, those rate of increases have taken place in 2 years. Okay? We were actually getting decreases back during COVID. You know, the companies, the frequency was not there, and most of the companies reduced their rates during the COVID and gave refunds. So you've seen this spurt in the last 2 years is what the numbers just told us. So, you know, this is now hitting the industry, and now, you know, their claims costs are going up. But we didn't get there overnight. You know, you didn't just snap your fingers and all of a sudden this loss experience just started. You know, it's taken 2 years to build that up. And our philosophy is, you know, the problem didn't occur overnight. There should not be a remedy to get your full indications overnight. There ought to be something in between. And that's the way we've always approached that from a rate-making standpoint. Believe me, it's never as good as the industry thinks it is out there, and it's never as bad as the industry thinks it is out there. And so we feel like there ought to be a pattern approach to this, and just a company, I mean, Allstate took their full indications. They indicated 25.3 and they took 25%. They took their full indications. A lot of times companies will not take their full indications. We're seeing a lot of low teens now, some around 10%, 10, 12% is sort of what we're seeing from private passenger auto filers. So, you know, our largest insurer just took like 11.9.
who is that?
So,
Excuse me, Mr.
State Farm.
State
State Farm's our largest. They write about 25% of our market.
Mr. Chairman, may I have a follow-up question? So, again, Mr. Manders, the presentation we just heard showed Georgia is an extremely competitive state. I can't remember exactly how many property and casualty insurers are out there,
About
right?
roughly 200, I think.
200. So, I guess I come back to like, I'll defend the trial attorney's right to advertise all day long. You know, that's just a competitive landscape. But if we have a healthy competitive landscape in Georgia where free markets can work and capitalism can work and people can seek the best return on their capital, and right now the competition in Georgia is working on behalf of the citizens of Georgia. Further government intervention that could disrupt that competitive landscape, which we had a little discussion about 30 years ago. We had an insurance commissioner that promised there would be no rate increases in Georgia, and it was no choice for the insurance companies. They left Georgia. It was an extremely difficult time to place any kind, I believe you mentioned, we had the old assigned risk pool. Everybody was having to go into the highest pricing tracks out there, and people with relatively good driving records. So my question is, what harm to the citizens is being done? Even you keep using Allstate, and if Allstate policyholders being mistreated by rate or service, there's State Farm right across the street, or Farmers, or Travelers, or the independent agent systems. There's plenty of competition for them to go get better service and pricing.
And I agree with a lot of what you just said, but there's one difference with private passenger auto than any other line of insurance. Y'all as a body require me to have it, okay? So it's not a true free open market. I have to have the coverage, and I promise you, back during prior administrations, there's nothing worse. I mean, I can get that 25% rate increase bill and I can shop, correct, all right? But there's nothing worse than when I get that non-renewal and then I go to shop my coverage and there's no availability. And that's why we have worked with the industry. We have, back several years ago, we were looking at increases 5, 6, middle single digit numbers. We see the pressure, we see the numbers, and we know that, if we don't work with the industry, it's a two-way street. We have to give some rate relief, but we feel like on a state mandated coverage that you ought to just be able to charge your full indications. I think there ought to be some in between there that we can sit down and have a discussion with the companies and have a negotiation.
Any other questions from the
I
committee
could go
members?
all day long. I won't do that to this committee.
Well, we also have rules starting at 9, and some of us have to get there,
Stand
so.
down, Mr. Chairman.
All right. Well, thank you very much, Steve.
Thank
Thank you. And of course, just to members of the committee, their office is just across the street in the Twin Towers. We have a legislative liaison, Wesley Burleson, and Steve is over there. So if you have any questions or any discussions, feel free to reach out to them. So thank you for being here this morning. This meeting is concluded. Thank you.